Hello dear traders, today we'll talk about XPeng Incorporated, traded at New York Stock Exchange, ticker name XPEV. And this is a very interesting stock in a sense that it was in the consolidation long term, and now we are actually in the second wave of consolidation. So if you look here, so first let's quickly talk about what stock is doing, and then we will talk how to buy here. So what we were observing after very nice growth in November last year, that we saw this increase in the price, really beautiful. So then what we were seeing here is actually a major decline. All the way we declined till actually moving average 20 with almost a straight decline channel, and then which is also very interesting here, that we started to rebound. So we had this decline, and then we actually rebounded here. And what happened after making let's say a positive rebounds, we had a secondary decline. And this is very interesting because there was a first period of consolidation that was taking place from, let's say, from December all the way till February, you can say. So it was here forming this very nice let's say trading channel and allowing us to consolidate. But then when we approached the bottom of it by beginning of February, instead of rebounding, we went lower with the next major was really classical channel here, because the first one was not really the channel, because it was just two waves, actually two sub channels to be more precise. But okay, you can call it one major channel. Here in this case we see from mid of February to mid of March really classical one-way channel, and now we form another consolidation area, which is between, simply speaking, the area of 40, and at the lower part it's just at 30. So roughly speaking, it's between 40 and 30, and now we're at the bottom of it. So the question is, will it rebound? So we will go to the third one. Will we go to the third descending channel? And only then maybe having some price action. So we need to take into account both opportunities here in order not to lose. So let's a little bit magnify it and shift it. So if we do so, we need to foresee, first of all, possibility to rebound from the current consolidation channel, which is between 30 to 40. And also we need to take into account possible formation of another descending channel, like one from February to March. This might probably send the price to the level of 2025. So to be able to trade on both, we just need to do our nonlinear averaging down and entries. So the first level to enter would be, of course, immediately here at this point at 30, and actually a little bit higher all the way to here, 31.11. So let's down for us. So it will be, to be more precise, 29.98 and 31.11. So this will make for us first buy opportunity. Let's write it as a call out actually for our convenience. This will be like this. So this will be our first entry opportunity here, and if it works, it would mean that we are indeed not going for the at least momentarily for the second, let's say for the third already declining channel, but we will return higher within the current consolidation channel up to levels of 40s, allowing us to make really nice profit here. And speaking of profit, usually we say it's 10 to 15% for this say stock. It will be from 15 to 20% profit taking, because it's seen and known to have really nice moves both upwards and downwards direction. So whenever you have profit within this range, just take it. Really don't hesitate, take it, re-enter if needed, or check other videos, check other opportunities, other stocks, either at our channel or elsewhere. But don't try to become rich from one trade. This is not possible, and usually it's a recipe for disaster. And one of the reasons why beginners fail in their first year of trading experience. So with this being said, this is the first entry. What might happen is, again, we might form a third declining channel here. If this is going to happen, still possible, we just need to prepare to buy at the lower levels, which would be actually in this case here, the level formed by price action as of the trading channel from all the way August, November, and a little bit higher as this inflection point that formed by beginning of November, which will make us between 22.25 and actually 23.97. So let's write it down for ourselves that we don't forget these numbers. So it will be 22.25 and 23.97. So this would be the second buying opportunity, and it would mean that we are actually going to form the third descending channel. Not really expected, but possible. And if possible, we just as traders who want to mitigate our risks, and that's what we do at our analysis, actually at our channel, the main strategy is a risk mitigation, and once you mitigate all risks, what remains for you is just to take the profit. So that would be the second channel therefore. And then what we need to take into account is a possible negative catalyst. If negative catalyst kicks in on these descending patterns, it could send the price even lower. Again, it's not that we expect those prices, but what does it mean to mitigate negative catalysts? This could be, simply speaking, news or global market situations, global market sector situations, whatever that can shoot the price down. And this is something that you cannot see, but it might come. And if you are purely trading only on technicals, this is the major risk, and this is well known, of course. This is ABCD of technical trading, that you cannot see the news, and news are the major, let's say, dangers for you. But with this approach, you can mitigate those, and mitigation means that you need to keep some funds to buy through the very principal levels, and here, of course, this would be between actually 17.47 and all the way almost to 20, so 20.05. Why this? Because this was the principal trading channel by a summer-autumn period, and therefore if we even have any bad catalyst coming in, we should at least pull back to those levels and be quite safe standing there and trading there, again making rebounds. So with this way of trading, you don't think, or you don't speak of stop loss, you don't speak of let's say cut loss or whatsoever. You just buy through slowly and prepare for major rebounds, because this way of trading can let's say can demand a little bit more time to be spent, but once the rebounds takes place, you could make really let's say nice profit, and actually it could be really significant. So that's the way we do, that's the way how we trade. So it's okay to spend a little bit more time. It's still daily trade, that's why we use daily candles here, not 15 minutes. But idea is that you buy through slowly and prepare for average down. So it's quite funny to say, but with this way of trading, once you open first position, any negativity is in your favor actually, because you will buy lower even more, and your overall average price will be lower with more stake. So once the rebound takes place, you will be able to make even more profit. And speaking of that you buy even more, it means that we do non-linear averaging down. So what does it mean? It means that in this case it's again classical 5 portions trade, but sometimes we do different numbers depending on additional risks. It means that the money you would like to trade here, you can split in 5 portions. Then you can buy with 1 portion in the first channel. Then if price declines to the second channel, which means it's a technical decline, you can buy again, or average down actually, again with 2 portions, because it's 2 more portions, and also taking into account that the price declined it even more than 2, relatively speaking, because then your new average price will be much closer to the actual price at that time. So once the rebound takes place, you will get the most profit. And the remaining 2 portions, of course, you keep for any negativity coming in. And again, because it will be also plus price decline, the relative number you buy through would be not only 2 Porsches, but will be more than 2. It will be 2.5, sometimes even relatively free. To explain this, I will make once a video explaining this strategy. So once the rebound takes place, you will be able to make really a nice profit here. So that's the strategy. Again, it might take a little bit longer time, especially if we go to the second or third levels, but the idea is that you mitigate all major risks, and then what remains for you is to take the profit, or in the really worst case scenario, just to exit with a draw. So we spend a little bit more time, but we don't want to spend money. That's the idea behind our strategy. If you like it, don't forget to follow our channel, press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks. We'll make many, of course, in upcoming future. So good luck with XPEV, and see you at another episodes of Stocks Advisor channel.